Going live. All right. Want to welcome everybody who's attending today's webinar, talking about small business lending, specifically the payroll protection program during the time of COVID. Want to welcome our two panelists today. First, we've got Austin Patchins. Austin, I'm saying that right?
Yes.
All right, and Austin got a brand new haircut, so he's looking good for today's presentation. Austin is a small business administration lender at Heritage Bank. I will link to Austin's contact page in the chat as well. And then we're also joined today by Joshua Brumley. Josh is the CEO at Brumley Law Firm, where he practices, among other things, business law. Want to turn it over this morning to Josh and Austin to talk a little bit about the payroll protection program, where things stand right now, and then I want to open it up as well. We really designed this to be a sort of a Q&A heavy event. There's still a lot of questions, even from businesses that have gotten approved and gotten money in the bank from the payroll protection program or the economic injury disaster loan program through the Small Business Administration. So I know we've got folks in that are going to attending today that had some questions they wanted to ask some folks that are sort of I'm not going to say that you're experts, but relative experts in this field. So I'm going to turn it over to Josh and to Austin.
Hello, everyone. For those that don't know, my name is Josh Brumley. I run Brumley Law Firm in Kent. We're a litigation-based law firm that does business law, family law, criminal defense, and personal injury litigation. For the purposes of today, I'll sort of be administering Q&A and chiming in as needed. But I really benefited from Austin's intelligence through this process for my business. I've steered a lot of people to Austin to get questions answered. And because of his level of understanding of these programs, I thought it'd be helpful to host a Q&A with Austin to try to get people their questions answered in a way that other people could benefit from. So posting this around and recording it and trying to get a lot of people who have I think a lot of the same questions that I had answered in a public way, I thought would be a great way to disseminate this information into the public. So thank you for those that are attending or viewing on Facebook or watching this video after the fact. Please feel free to contact me at brumleylawfirm.com for any questions you might have after this. Austin?
Thanks, Josh. I do SBA lending for Heritage Bank. My region is basically anything just south of Seattle, so Kent, Renton area, all the way down to basically the Oregon border, and all I do is SBA lending for the bank. Feel free to drop your comments in the comment section for the Q&A like Josh was mentioning. I'm just going to take it away with just some quick updates, facts about the loan programs, just a quick little side-by-side, and then Josh and I are going to do sort of a back and forth on some of the, I guess, more frequently asked questions about the basics of the program prior to getting into actual Q&A with people viewing this. So quick background. I got this kind of typed up on side screen here, so pardon me if I'm not looking you directly in the eye here on camera. So PPP was passed as part of which is the Paycheck Protection Program. It's part of the CARES Act back on March 27th, which seems like forever ago now. The program went live on April 3rd, and most banks opted to start processing on Monday, April 6th. That first go around of PPP funding, $349 billion. And those funds ran out just before 8 a.m. on Thursday, the 16th of April, which was basically 10 calendar days, and roughly running at about 30 billion going out the door on a daily basis. So obviously funds were in high demand. So the government decided to do a second round of funding, which passed for another $310 billion and opened up for funding starting Monday, April 27th. Those funds are still going on. Just to give you an idea of where everything was at, as of Wednesday, we had $183 billion go out the door. I checked last night / this morning for the update as of through Thursday, and only 185 billion of that 310 has gone out the door. So it's dramatically decreased from about 30 billion a day in round one to around what was going out around 14 billion to start the week on average for this week. And now, as of yesterday, only 2 billion went out the door over the last 24 hours.
Only 2 billion, but
oh wow,
yes.
Relatively yes, it's a lot of money, but relatively speaking, it's slowing down. There's less and less requests. So if you are sort of late to the game and are still looking to apply, banks are obviously still processing these. There's still funds available. So definitely have the ability to get out there and get your name and your business taken care of. So round one, just to give you an idea from a size standpoint too, there was about 166 million, 1,666,000 loans approved for that 349 billion. So far, round two, there's been 2.4, almost 2.5 million loans approved for only 183 billion. So the first go around, I think there was a lot of bad press from some larger companies taking advantage of this loan program that weren't truly small businesses. And I think with this second round of funding, you're seeing a lot more of the truly small businesses being helped, and community banks are obviously leading the way with that. So again, funds are still available. The difference between, so I'll launch into the differences between the two programs, between
Please.
EIDL and PPP. EIDL is truly a loan for your business, an economic injury disaster loan. It's based over 30 years. The government administers these directly. You've got 30 years to repay it with an actual interest rate of 3.75%. There's collateral taken. You give a personal guarantee, and it can basically be used for almost anything that your business needs it for. It's based off of gross profit, is how it's calculated. And there's not really a loan forgiveness piece of it. There's a $10,000 grant that you could get, that is a grant and not meant to be repaid. But that loan is meant to truly be repaid over a long period of time. And it's anywhere from a small amount up to $2 million. The PPP, Paycheck Protection Plan, is really meant to be forgivable. It's meant to be an economic stimulus, and it's meant to essentially keep employees employed with their employers and maintaining their current payroll, and essentially keep them out of the unemployment line. It's, again, meant to be forgiven. There's no guarantees, no collateral. There is a repayment term should you not appropriately use all of your funds in the right way. That were part of your loan not forgiven, it would be repaid in 2 years at a 1% interest rate. So those are the primary differences. Definitely PPP is the preferred method to getting the money to the public, just from the standpoint of it is forgivable if you use it appropriately. So we'll launch into some sort of canned questions here, Josh and I, some prompted questions, give you guys some information on how the programs work, mainly the PPP, and then if you have additional questions, we'll go from there.
All right. And before we do that, I want to point out something that I think is relevant, and I might have missed it, Austin, but as far as the EIDL, those funds have been exhausted. They're not accepting new applications at this time for EIDL. Is that correct?
I think EIDL actually did have a second round of funding as well as PPP. I'm not, since it's administered directly from the SBA, I'm not keeping tabs on that as much as I am on PPP because that's being administered directly by the banks. But I believe it is still open and accepting applications, but that system is extremely bogged down, is my understanding.
Yeah.
The SBA is a one entity, one branch of the government, as opposed to the numerous banks participating.
So I think, like you said, we're going to talk a lot about the PPP today, not as much about the EIDL because that's not sort of what you're involved with lending. But speaking from experience, I know that people who have received the EIDL or applied for and been approved for but haven't been funded yet, anything over a 25,000, I believe, is the cutoff, maybe 20 to 25, something like that, requires that you file a UCC filing of a lien for your property in order to receive the additional funds over $25,000. And the SBA gave guidance that that is done through the Secretary of State. But after going through and talking with the Secretary of State, it's not done through the Secretary of State. It's actually done through the Department of Licensing in Washington. And I think that as an attorney who took classes on UCC and secure transactions, the process was so unclear for even me that I'm sure that that's stuff that other people are dealing with that don't have a background in secured transactions. And so if people need help with that specifically or want to ask questions about that part of the process specifically, please reach out to me. Turning to the first set of questions, if anyone has a question, please drop it in the question and answer. Thank you, Yasmin. We're definitely going to get to yours as well. We're going to go through the ones we have listed and then get to the question and answer in the chat as well. So the first question is, what different programs are available to business owners currently?
So this we kind of already covered. This is the Paycheck Protection Plan, I think, is the best option. There's the EIDL. There's also a SBA Express bridge loan for small businesses up to $25,000, but that is for businesses that already have a lending relationship with a bank. So if you have loans and you needed a quick bridge gap financing, there's that available as well. And then beyond that, if you already have an SBA loan in place, if you had for your business, you had financed a building or a piece of equipment or something in the past, the SBA is also covering 6 months of payments for all existing SBA borrowers. And then beyond that, it's just working with your bank if you do have lending for, existing lending for, deferrals or temporary payment modifications. Those are sort of your best actions outside of seeking PPP or EIDL money.
And so people can qualify for both EIDL and PPP, is what you're saying?
Yes, you can qualify for both programs. The only stipulation is that they're supposed to be used for different things. So if you're getting a PPP loan, you should be using it obviously for payroll and other such things. And if you're getting an EIDL loan, it can cover a wider range of items. You can pay for your accounts payable. You can pay, debt obligations and things underneath that you're not allowed really to do with a PPP loan. So it just depends on, you just can't double dip and use them for payroll.
Gotcha. And Dina, we're going to get to your question as well. Please stay on the line, but we're going to go through the questions we've got in front of us, and then we're going to go through the ones in the question and answer, but we will absolutely answer that question for you. What are the minimum qualifications for the Paycheck Protection Program?
They're pretty straightforward. They're pretty minimal. The intent is to get as many people qualified for this program as possible. So quickly, you have to have been in business prior to February 15th of 2020. You need to have less than 500 employees. If you have more than that, there are some special circumstances that other businesses can qualify for. If they have more than 500 employees, dealing with restaurants can qualify for more. There's a few others, but most people are going to fall into the under 500 employees. You have to certify that you aren't currently in bankruptcy or aren't disbarred from whatever your area of practice is. You can't have defaulted on a government-based loan within the last 7 years. That would be student loans or government-backed, VA mortgages, other SBA loans, anything along those lines. If you've had that also disqualifies you. And if you're currently have felony charges against you, or have pled guilty, or I'm not a lawyer, but if you basically pled guilty or been found guilty of a felony within the last 5 years, you're also not eligible. And then your payroll needs to be for employees inside the United States. So if you pay for IT people overseas, their payroll would not qualify. So those are the main basics of what you need in order to qualify. Okay,
great. And then what is the loan request based on? Like, how do you calculate how much you're requesting?
It's based off of payroll and other payroll related benefits. So that'd be healthcare costs that the employer pays for. That would be retirement benefits that the employer pays for, W-2 wages, and it can't exceed $100,000 for any employee on payroll. If you have benefits and other such things that you pay for your employee that exceed $100,000, those can be counted, but the actual like payroll cannot exceed $100,000 per an individual employee. And it's different for each business. Some businesses obviously are single member LLCs, sole props. They use 1099s or Schedule C. You can use those things to qualify as well. Just depends on how your business is structured. So if you have guaranteed payments from your company because you're a partnership, or you receive royalties because you do gig work or something else like that, or your 1099, those all count. If you have a partnership and you don't pay yourself traditional wages as well, you can also take your self-employment earnings, which is box 14A of a K1. That also can qualify. There's a couple of different ways to do it, and it just depends on how you're structured, but those are the primary things. It's 10. And to give you the calculation as well, you would take most of 2019. So you'd take your 2019 information and you'd divide it by 12 to get your monthly payroll, and then multiply that by 2.5 times. And that would be your loan amount. It's essentially 10 weeks of payroll.
Okay. So that's a lot about the application process and how to choose how much you're applying for. And I think a lot of people are asking questions about forgiveness, and it looks like that's what we're kind of going to move towards here in the canned questions that we've prepared. So how is loan forgiveness determined?
So we don't have full guidance yet from the SBA on this. All we have is our understanding of what is currently printed in the CARES Act, and some guidance from trade organizations that banks work with, which would be things such as the American Bankers Association, their interpretation of the rules, our own personal bank's internal interpretations, et cetera. But we don't have clear guidance yet. So a lot of this is somewhat subject to change, and will really depend on once we do have full guidance from the SBA. So with that, I guess, disclaimer out of the way, our understanding is that you have to spend 75% of what you qualify for PPP on payroll. 25% can go to ancillary items like rent, utilities, loan interest, etc. You need to maintain the salary levels for your employees that you currently keep employed, and you can't reduce staff. My understanding is, well, you can. If you've reduced staff by more than 75%, then there starts to be a decline in what can be forgiven. But that's where we're not clear, is how that looks and what the step downs are going to be. Somewhat like with the CARES Act sending out money to individuals, how once you got over $75,000, there was a step down, or if you were filing jointly and you got over 150, there was a step down in the amount that you could qualify for, and then at $200,000, it completely, you weren't allowed to qualify. So I'm not sure. There's going to be some sort of tiered ladder like that, where depending on how many employees you keep will depend on what your forgiveness amount is. But really, it's going to be based on the number of FTEs at the end of the 8-week period of when you've spent the money, compared to your historic average.
And you said FTEs, but that means full-time employees.
Yes, full-time employees. So when you're actually going for to apply and you're putting in your application, it asks you for the number of employees, and the number of employees that you write down is anybody that works more than 40 hours a month, so more than 10 hours a week for your business. So when you're writing down the number of employees that you have, you're actually writing down all part-time and full-time employees. But when you go to get forgiveness, they're only talking about full-time equivalent employees, FTEs, full-time equivalency. So it's a little, our understanding is that it'll be a little bit easier to qualify for forgiveness based on, compared to what your historic total employee count was.
So I want to just kind of point something out. There's a lot of things we don't know about these programs, and the application of the programs of EIDL and PPP are different for different people, because some people have received the EIDL and then they got the PPP. Some people have received the EIDL grant and some people haven't. Some people have received the PPP first, and then they get funded for the EIDL. And as far as your understanding, every one of those scenarios changes what could happen. Is that correct?
Yes, that is correct.
Okay. So individuals who have received both loans or both financial program assistance should be aware that when they received and what they received can change the analysis. And this is more of a general, just based on PPP discussion, correct?
Yes.
Okay. And then, so you also mentioned need to maintain same salary levels, can't cut payroll. So the way I understood the rules, including the fact that there's a change in FTEs would reduce your amount of forgiveness. The same regard the change in salary levels. If you reduce salary, that also reduces forgiveness. It doesn't make that employee ineligible for that payroll. It just reduces the amount of forgiveness with some calculation that we don't yet have all the details of. Is that correct?
Exactly. That's exactly correct. If, as a good, easy example, if you were paying your employees $1,000 a week and you were bringing them back with this PPP fund, but you were only paying them $500 a week, that would be, potentially you could be giving up your right to have full forgiveness if you started paying them less than what they were earning beforehand. To what degree? Again, we're not sure. I believe we've been kind of going with the 75% is our understanding, but so you would at least if an employee was making $1,000, you need to at least continue paying them $750 on a weekly basis. That's sort of the rule of thumb of what we understand currently.
Okay, and then it looks like on the next prepared questions, they sort of go into some other options outside of forgiveness and after spending the money. But I think all of our questions right now and what the public needs to know as this money comes into their bank account, what is the best way to prevent themselves from being in a situation where it won't be forgiven later. So we have a lot of questions from people who are asking about specific situations that they're in that I'd like to get answered or
Sure.
at least discussed.
Yeah, let's launch into that. But let me just answer this, I guess, a quick question about what you should be keeping. You should definitely be keeping detailed payroll records, organized some sort of expense tracking sheet, and then obviously keeping receipts / invoices for if you are paying for things that are outside of payroll, such as utilities, rents, interest on a loan payment. That is, all those things are potentially forgivable. So definitely make sure that you have those items. Just want to be organized.
Right. And I think you had mentioned, Austin, that it wouldn't be in someone's worst interest to just start a new account with these funds in them and then pay payroll straight out of that account, and then all the other expenses that might not be eligible to run out of their normal operating account. Is that still what you recommend to people?
A lot of our customers have set up separate accounts. They're not necessarily paying their payroll out of it, but when it is time to pull payroll out of their operating account, they're taking that figure and then making a transfer out of that other account. That way they have a direct, paper trail of I advanced $200,000 over here to pay 2 weeks of payroll to all my employees.
Yeah. That probably makes it easier for whoever's going to do the application for the loan forgiveness at the end of this process. And so that's something that I'm kind of keeping in mind for my business is how can I be the most organized right now, still use this money in an environment that, okay, now I have it and I need to make a lot of big business strategy decisions and I need to do it responsibly with my business's health in mind. But I also have this additional criteria that I have to keep aware of if I want this loan to be forgiven, then I need to make sure that I'm keeping track of every penny that was spent and what it was spent on, which, exactly. I mean, that's a good bookkeeping practice, but as business owners are aware of right now, things are so crazy. And so keeping that on the forefront of your mind, I think is an important takeaway from this Zoom meeting, I guess. And so with that, we'll transition to the Q&A that was proposed from Yasmin. We are a nonprofit with federal contracts and grants. When we calculate the forgivable portion of the loan, do we need to exclude the federal contracts, or will the forgivable portion include our overall payroll?
So
Is
I'm just reading this as well, verbatim. So you're saying that the question is nonprofit has government contracts and wondering if they exclude those from their overall payroll. I haven't seen anything that addresses anything like that. So unfortunately, I don't have an answer to that question right now. That would be something that obviously as we get more guidance on from the SBA, there will be specific questions that are asked that ultimately when we as a bank get something like that comes up and we don't have an answer once SBA's issued guidance, we would then go to SBA directly and ask that specific question. And then if it's not covered in the initial guidance, SBA usually makes amendments to the guidance, which is why we're hoping that they'll have something out. We were hoping this week that they would have something about loan forgiveness, but they haven't yet. So hopefully by next week, that way we have ample time to ask specific questions like yours in order to, make sure that we have answers before the 8-week period is up when people have spent their money.
that's a good discussion that we need to get into as well. Yasmin, if you have some clarifying information about your question, I think it's hard for me because a nonprofit with federal contracts and grants makes me think that is with regard to income, not with regard to your employees. So the forgivable portion, including your overall payroll, if you're paying individuals who are working on those federal contracts, then they're still employees. If you're providing a service as a nonprofit to a government agency, whether that's a public defender's office or some other type of contract that you have with a city government, or it looks like you have federal contracts, the fact that you have employees is really the analysis. And whether those employees are contract workers or full-time or part-time W-2 employees is the analysis that Austin would make when calculating someone's eligibility for the PPP. And then once you're eligible and are funded, then the analysis turns to how did you spend that money and whether you spent it on qualifying payroll expenses or other expenses. So if after that you have maybe some clarifying information or want to ask another question, please drop it into the question and answer section. We'll circle back to it. But
Josh, I think you're spot on with that analysis as well and that interpretation. So
thanks, dude. So it says the next question, for the 8-week period for spending the money and then dealing with the analysis for forgiveness, is it looking at 8 weeks of a pay period or 8 weeks from pay date to pay date to pay date? Can you talk about what the actual window of review is for spending this money?
It's 8 weeks from the time that your funds are dispersed to you by the bank that you've applied with. So ultimately, this is going to be funky for some businesses where they have payroll that may have either just occurred or is going to occur just after the 8-week period. And in order to kind of line it all up, that's going to be something you have to talk with your bookkeeper, your CPA, and maybe, if you're coming up on week 8 and your payroll is set to cut 2 days after, you originally got it, maybe cutting your payroll a couple of days earlier to make sure that it falls within that period. We don't have guidance on whether stuff that falls outside of the 8-week period is going to be allowed to be, kind of put back in if that's going to be allowable yet. So my recommendation right now is try and sync them all up so they do fall within that 8-week period. That way that you're in that covered period.
So I think that in regard to Yasmin's question, it's not about pay periods, it's not about pay dates, it's not about your pay cycle. If you were funded, if you received the money in your bank account from Heritage Bank, Wells Fargo, Chase Bank, whoever, if you received that money today, you'd have 8 weeks from today to spend that money on qualifying expenses and then apply for forgiveness after that 8-week period is over.
Correct.
Okay, great. Hopefully that answers Yasmin's questions. If not, please chat us some more. We have plenty of discussion to still have. Dina asked, I joined late, so I apologize if you already went over this. If a solo practice law firm gets an SBA loan, can an attorney pay themselves as part of the solo firm's payroll and qualify for the loan forgiveness of the SBA loan?
Yes, you owner salaries, as long as that's historically what you've paid and you're the only person, that's what you've qualified off of, as well as your payroll. You can pay yourself a salary as long as it doesn't. annualize out to more than $100,000. That would be, again, you can't qualify for anybody who's made more than $100,000, and loan forgiveness does the same thing. If you've gone over $100,000 from an annualized standpoint within the 8-week period for any one employee, the amount over the $100,000 is not forgivable. So as long as you're staying within those bounds, you can pay yourself
up to $100,000.
Yep, exactly. Well, up to $100,000 if it were annualized. Yep.
Right. Not $100,000 in 8 weeks. Absolutely not. Okay, and then another question from Dina. Can a 1099 contractor double dip, in quotation marks, and get both expanded COVID-19 unemployment through the state and an SBA loan?
I'm not clear on that, but I don't believe that you can double dip with this program. As far as the expanded unemployment benefits, I don't think that you can get both and also acquire a PPP loan and have it be forgiven. You may still be able to qualify for it, but you may, when they go to, and you also might get your loan forgiven initially, but if there's any auditing of, when you prepare your taxes at year end and you're stating that you received a PPP loan and during that time frame you received enhanced unemployment benefits, you could get in trouble at that point. And I'm not 100% clear on how that
Sure.
Because I don't know enough about the expanded unemployment program.
I think I might be able to just try to add some more clarity to that as well. So the idea of the unemployment program is to provide support for people who don't have the ability to work, and the PPP SBA loan, or the forgivable aspect of it, is intended to move people off of the state assistance programs and put them back in an employer-employee setting. So if you're receiving both of those, that sort of defeats the purpose of why the PPP was created. And so my guidance would be ditch the unemployment program and use these funds from the PPP in a way that you could pay yourself your normal salary. You don't have to go through the terrible unemployment website, the bogged down reporting process, and all of the other stuff that you have to do to get those funds from the state. Ease that burden for people who don't qualify for the PPP, who have to go through unemployment, and then use this PPP to build your business, pay yourself your normal salary, and spend that time working on how you could attract new customers, or make a plan for reopening when it's time to reopen. Take advantage of this downtime where you might not have the same customers or clients, but you could still be productive and pay yourself with the PPP in a way that makes it forgivable. So that's how I'd answer Dina on that one. We have a couple more questions, but if anyone else has other questions, we still have about 30 minutes, so we can stay on the line or end the broadcast early if we run out of questions. But from PCAF, there have been conversations about using PPP funds for retention bonuses. Any word on that?
In short, no, not yet. We don't have specific clarity on how bonuses or some of these other payroll things might be looked at. But again, I think if you're, again, as long as you're not paying over $100,000, and I don't know if that would it's not a direct payroll cost, it's something extra, and that they could count it as something like healthcare or retirement benefits, where you could go over the $100,000 threshold for specific employees. We don't have guidance on that currently. So at the same time,
that's something we haven't covered, but Austin, you and I have talked a bit about as well, is the annualized requirement of $100,000 salary. That's the cash pay requirement, but other benefits such as health benefits and 401k contributions, those don't count towards the 100,000. So could you discuss, and obviously we don't have the exact guidance. I think we have more guidance in this area than maybe some of the other forgiveness areas, right? So could you talk about what beyond payroll you believe is a forgivable additional benefit that employees could receive?
Sure. I mean, I don't, again, you've kind of covered them as far as healthcare and retirement. I don't know if there are any other sort of like.
So for example, if someone wanted to pay out their employees vacation pay, would that count towards the $100,000 annualization, or is that corollary benefit that wouldn't count, and therefore, if an employer wanted to go through this process of a retention bonus, they could say, I'm willing to cash out all your vacation pay in one lump sum if you come back right now. And then we can discuss if I can offer you some more vacation pay down the line after the business has gotten back on steady ground. That
Sure.
might be a way to encourage employees to return beyond just their normal salary.
Potentially, but I'm not 100% clear on whether that would be allowable or not, whether they would consider accrued vacation time that's being paid out in a lump sum as, because I'm not a payroll CPA expert or have the SBA's guidance. I'm not sure if they would sit there and consider that to be more payroll than true cash, payroll, or if that's something that flows through differently as an ancillary benefit. Again, all of these things would show up on a W-2, so it's not like it's some simple thing where if it's on the W-2, great, it qualifies as payroll, and if it's not on the W-2, then it's an ancillary, other benefit. Obviously, healthcare items and employer contributions to 401ks, those all go through a W-2 anyway, so that I don't have an answer for that one, Josh.
Okay, what about pay raises? Is that a possibility?
Potentially. I think we discussed that one a little bit, that in general, it's meant to be a stimulus to the economy. So I would think that, the main verbiage is around not decreasing payroll. So obviously increasing payroll is probably not a bad thing. We also talked about that for hiring new employees. And again, we don't have guidance on how that looks, but SBA in general is an economic stimulus program, even when it's not the PPP. So if we were doing a regular SBA loan, we would be looking at how many new employees are going to be coming on for this business and their expansion or whatever they might be doing, or if they're startup or whatever we're financing under the regular program. We measure how many employees are employed by that individual company. So if you're hiring on a new employee as part of this PPP, I don't have guidance on whether that's going to be forgivable or not, but I would think you're spending it on payroll, you're hiring a new person, that would seem, and I mean hiring a new person as in you were going from 10 to 11 employees, not one of your employees is not coming back to work for you and you're having to hire a replacement. That's obviously different.
And that's, I think, another question that we have that's next in the list here, PCAF. If reduction in FTE is due to people resigning, being laid off, or furloughed, does that have an impact?
It does. There is some guidance on that has come out from the SBA on that. You are to go back to your employees that you have furloughed and try to hire them back. If any of them decline and you have it written and documented that they're saying, I don't want to come back to work, I'm enjoying the unemployment that I'm collecting, they can potentially be putting their unemployment benefit at risk if they decline coming back and taking the PPP funds, assuming that you're paying them, the same amount, you're not reducing their pay. And yes, they don't have to come into work. That's not the purpose of it either. It's essentially paying employees at home in order to use these funds appropriately within that time. And again, you can reduce staff to some degree, but just not. You can't just get this loan and pay yourself and not hire back any of your employees.
Okay, well, that looks like we're caught up on those questions. We discussed what do we need to keep in order to get loan forgiveness, and I think your wise guidance from the bank point of view, which is the people who are going to be receiving the applications for forgiveness, right? When we go to apply for the forgiveness, we go to the lender that we bank with, that we got the funds from, to apply for the forgiveness, correct?
Yeah, the bank actually applies for loan forgiveness on behalf of the customer. So you provide all the documents and all the materials. The bank is going to be the one who's ultimately going to the SBA, presenting your packet of information with a bank prepared internal application essentially to the SBA for the loan forgiveness on the customer's behalf. So you just keep track of your data. We go ask for the forgiveness. And if you did something wrong, obviously we're going to have some more guidance to help you make sure we do it right the first time. But if you go and apply and they only forgive 95% of it, then you're going to have 5% of your initial loan remaining with that bank, and you'll have to repay that. And that's what kind of gets into that other question of what happens if my loan isn't forgiven. Well, at that point, you have now a 2-year loan with a 1% interest rate that's technically deferred for the first 6 months. So you technically only have 18 months to repay it once payments start. So hopefully everybody gets their loan 100% forgiven.
Yeah, that's the goal, right?
You don't have to worry about that. But that is
okay. Well, and I think you just covered my next question is what happens if my loan isn't forgiven? So if for whatever reason a portion or the entire amount was spent on outside of qualifying expenses, then the loan stays a loan. You have 6 months after this 8-week period. Is that when it begins? So you have 8 weeks to spend it. Then that 8-week period ends. So 2 months. And then 6 months from that, the loan is deferred. So you don't make any payments for 6 months. But then you have the remainder of the 2-year term, which is 18 months, to pay the entire balance off.
Yes. And there's a question, if a portion is not forgiven, can you just pay that amount back immediately? Yes. At the time you go for loan forgiveness, you can pay that amount back. There's technically a safe harbor right now for businesses, larger businesses who've applied and are deciding they don't want to use the funds because they're concerned that they might not get it forgiven in the end. And that's currently going on. They extended it through the 14th. So any business who's gotten a PPP loan is considered, they don't think they need to use it now, or they're concerned about forgiveness. They can give it back, without no harm, no foul, essentially. Also put a good link in the comments section that Josh, for an article that you had shared regarding PPP loan forgiveness that is pretty thorough with guidance that we do have. Again, it's probably not going to cover every scenario because we just don't have enough information yet.
Well, for the people who haven't applied for the PPP that think that they qualify, what do they need in order to apply?
So you're gonna gather up your payroll information, and it just depends on how, we kind of skipped over the payroll calculation. There's a couple of different ways to do that. It just depends on it when your business started, if you want to use a calendar 12 months or a true fiscal year end from last year. There's a couple of different ways that you can calculate your payroll amount. The bank that you're working with will have a calculator for you to utilize to determine that. But you're going to provide, W-2 information, W-3, 941 information, depending on, again, how you're set up, 1099s, Schedule C. If you're a partnership, there you can potentially use K1. Like I said, box 14A. You're going to provide your entity information, which is, operating agreements, articles of incorporation, bylaws. Just depend, again, how you're structured will depend on those documents. Your business license, copy of driver's license for owners, a completed application, some sort of loan calculator that shows how you came up with the amount that you put on your application. And then that basically covers the brunt of there are specific situations that call for additional, documentation outside of that, but that's the brunt of the documentation that banks are requiring in order to apply.
Okay, and then if someone wants to gather their tax information, their business entity information, and they're interested in completing an application, where do they go to apply?
So we're pushing for customers to go to their existing banking relationship strictly from the standpoint of that bank already has presumably most of your information. They're going to have probably copies of your driver's license, your entity information from when you opened a business checking account with them. If you already have a lending relationship with them, they may already have some of your tax information as well. So it's going to make your application process a lot quicker. And like I said, the funds are starting to slow down going out the door. So I know that banks have worked through probably quite a few of their loans at this point and have more time again now to, help some of the businesses that haven't gotten PPP funds yet. So I would definitely encourage you to go to your existing banking relationship first. However, all banks, for the most part, most banks are accepting these applications. You can apply at more than one bank. You don't have to simply apply. If you have a split relationship with multiple banks, apply at all of your banks that you bank with. SBA only allows them to pull one approval. So if you're working with a couple of different banks and two of them are moving slowly and a third one gets it done the quickest, then you can just inform your other two banks that you applied with, hey, XYZ bank for me. You don't have to process my application anymore.
Okay. Well, I think with that, we've answered all the questions. I know that we didn't talk too incredibly much about the EIDL, but
hey,
yeah,
Josh, there was actually a question from PCAF in the chat, so I'll read it to you.
I think Austin might have answered that one. If a portion is not forgiven,
that did get answered. Good. Okay.
Can you just pay that amount back immediately? The answer to that question is yes. I think that's sort of the benefit of this, taking advantage of this program, is if you get the money and then once you have it, for whatever reason, you don't need to spend it, there's no penalty of just giving all that money back. If you get that money and you only spend half of it on things that you know qualify, and you have half left over, you can give that half back and then just apply for forgiveness on the 50% that you actually used. It's very, I think it's a really good program. It's really helpful. I haven't gone through the forgiveness portion, obviously, for my business, and that's why I'm constantly texting and emailing and calling the people that I've been in contact with. Another resource for individuals who are interested in talking more about this, besides Austin and myself, is Taryn Hornby with the SBDC, and we'll put her information in the chat as well. She's the Small Business Development Center liaison in, is it Green River, Austin? Green River?
Yep, that's correct. And they're a sort of a sister company to the SBA, if that, not a company, but sister entity. They're funded by government dollars as well. So they're mentors. We use them a lot for people who are coming for SBA loans that might be startup or something along those lines. And we, if they need help with a business plan or putting together projections for a normal SBA loan, we utilize the SBDC a lot. So they're a great resource as well.
Perfect. Yeah. And Jason put that information in the chat as well. So if anyone has any other questions, great. But if not, I think we could wrap things up. Make sure you put your email into the chat if you'd like a copy of this webinar. We have done some other landlord-tenant webinars, myself and Jason and Tacoma Pro Bono. So that's been available if you're interested in watching those meetings. And then we have one next week. Jason, what day is the other one we're doing?
I think that's May 12th, 11:30 to 12:30.
Okay, and that one is with regard to family law issues during COVID. So parenting plan, withholding of children for health reasons, and a lot of questions with regard to the climate and the family law courts. So if you'd like to view that one, we've got the link circulating around. Jason, if you could drop that in the chat as well, that'll be a pretty cool one to learn a lot about things that parents have to deal with right now from split households. All right, well, thank you all for coming. Thank you, Austin. Thank you, Jason, for helping me put this whole thing together, and Austin for taking the time out of your workday to be a part of this meeting. And
Thanks, Josh.
you didn't miss too much work today, right?
This is work.
Okay, great. Well, thank you for your knowledge, and I'm going to continue to pick your brain all the time, and I hope everyone else does too.
Thanks.
Thank you.
Right. Thanks, everybody.